All right, well, lots of action in the commodity stocks, lots of volatility in the stock market. Is it time to buy commodity stocks? And is there more weakness coming in the stock market? That's what we're going to try to figure out this week. Plus, look at the day trade of the week on INDO and run a market scan for longer term trading opportunities. That's all coming up. So we've had sanctions against Russia and, of course, lots of COVID stimulus around the world, and that's brought on a lot of inflation in commodity stocks. We've seen most notably oil move up sharply, and that, of course, has been supportive for the energy market. But it's not just oil. There's also strength in precious metals, in wheat, and corn, so many commodities that are escalating in price because of supply shortages stemming from the Russia-Ukraine situation, and also, again, just from strong demand versus supply after COVID stimulus. So, what is going to happen next with commodity stocks? Well, it depends on the time frame that you like to trade. Whether you want to be a buyer on Monday or Wednesday next week is largely dependent upon the time frame that you trade. If you are a long-term trader, holding for weeks or months, the answer is very different than if you are a day trader where you might be holding for a couple of hours. And the key thing is to make sure you avoid chasing parabolic trends. What we want to do is buy breakouts from predictive chart patterns. Now, you can have a very different answer for the same commodity depending on the time frame. So, if you're trading oil, for example, and I'll show you on the chart in just a moment, the daily chart for oil is parabolic. It's very risky to be buying now. However, on Friday, on the 2-minute chart for oil, it broke out to start the day, and some of the best day trades on Friday were in the energy space. So let's take a look at some of the charts here and just describe this. So here's that chart of USO, which is one of the oil funds. There's a number of them, but this is an ETF that represents oil. And if I was to draw a trend line, it would look like that. Now, a general rule is when prices run away from the trend line, like they have in the past week, that's called a parabolic trend. And it's likely that price will then come back to the trend line. Now, it doesn't have to come back on Monday or Tuesday or Wednesday. We don't know when it will come back, but it almost always does. And that means buying a parabolic trend is very risky. Let's take a look at the intraday chart of oil now, the same one. This is a 2-day, 2-minute chart. And what you can see is that on Friday, late in the day, there was a breakout from what's called a cup and handle pattern. So here's the cup, here's the handle, and you had that breakout. So as a day trader, you can buy for that little run into the close. So again, the answer, whether you are day trading, swing trading, position trading, is going to be very different because we analyze different charts. What we want to do, though, is make sure we avoid buying parabolic trends. And on the longer term time frame, for most of these commodities, we have parabolic trends. Now that takes me to the chart for wheat. And again, this isn't the actual commodity. This is an ETF that is backed by the commodity. And this is a 30-day, 60-minute chart. You can see that on that 30-day, 60-minute chart, we broke out from a predictive pattern back on February 22nd. And it's been going straight up since then. Now, it started out sort of linear, and then it got steeper, and the trend got steeper and steeper, and it became a parabolic trend, which broke down in the first 2 hours of the day on Friday. And that sets up for a pullback to this upward trend line. Now, these concepts are really, really simple, but they're not common sense. You don't think about this when you're buying these things. But if you can learn how to understand trend lines, parabolic trends, predictive chart patterns, breakouts from these chart patterns, then you can play these commodity stocks, or any stock for that matter, using these simple concepts. All right, well, let's get into this week's normal market analysis, starting off with the US markets. And they recovered a little bit, or at least stabilized a little bit this past week. We've been sort of stuck in this sideways range after breaking the downward trend line there. And that's good, but we still haven't overcome the pessimism. We need to break up from a rising bottom. So we've got a low here and we're building new lows here. If we can break up through that ceiling price, then we should make a move up toward the highs. If, however, we break down through this floor price, we're probably going to retest those lows. So that's what you want to watch for next week. At the long-term chart, you see we have this long-term linear upward trend, which was broken 6 or 7 weeks ago, and we've been drifting lower ever since. We haven't really made a strong breakdown through support, so that's what you want to watch, is if we break down through that floor price, because if we do, that'll be a breakdown from a falling top that could lead to a fall into that next support zone. So I don't think the market looks particularly strong, but not in panic mode just yet. On the NASDAQ 100, again, there's that linear upward trend line that was broken here, and we've been drifting lower ever since. Simple concept. When linear trend lines get broken from a falling top, the market usually goes lower, and that's why we've had that 6 or 7 weeks of weakness. We have good support here from that little reversal candle, but we still need to break that downward trend line from a rising bottom. So the exact opposite of what happened back here. We're now looking for a break of the downward trend line from a rising bottom. We'll see if that happens. Until it does, be fairly cautious with those NASDAQ stocks. IWM, which is the small cap stocks represented by the Russell 2000, you've got a double bottom. You're trying to break the downward trend line. Haven't done so yet, but if we can do that, we should move up into this trading range. So the small caps are actually looking a little better than the large caps, but by no means is it a strong market just yet. Canadian markets, very different than the S&P, and that's because of the dominant force of commodity stocks in Canada. Lots of energy stocks, lots of mining stocks, and that's why this market has been moving up. Those sectors of the market have been propping up the Canadian market overall, but there's still lots of weakness in Canada. It's just the commodity groups that are doing well. And if you own those, great. They're still holds for the most part, but buying them, you got to be very careful that you're not chasing emotion. On the longer term chart, you can see also that the S&P was much weaker than the Canadian market. Canadian market really just stuck in a sideways range, being propped up by commodities, while the broader market is weak. On to the TSX Venture, and I think investor psychology pretty negative right now, and so you've got this micro-cap speculative market drifting lower. We need to break the downward trend line. When we do, I'll get a little more optimistic, but for now, avoid these stocks. On to currencies. You can see the US dollar had a really good week this week and has continued in the upward trend that the charts predicted when we broke out back here. First, we broke the downward trend line there. We built the rising bottoms. We broke, and that was the buy signal, and that's why I've been bullish on the US dollar for some time. Bitcoin, trying to break this downward move. We talked about that a few weeks ago. It's still holding support, potentially building a rising bottom, but we need that show of strength on the weekly chart to tell us that we can start another move like that. So cautiously optimistic on Bitcoin. Similar situation for Ethereum. This is actually the daily chart. You can see that downward trend line broken, potentially building a rising bottom, and we just need to break up through this ceiling price to start a recovery. Not there yet, but something to watch for. Interest rates. The interest rate chart broke down a little bit this week. Counterintuitive, but it demonstrates that the market had priced in interest rate raises, and now with the situation in Ukraine and really the contraction of the economy based on high commodity prices is having an effect on the potential for interest rates to be raised. You know, if you're buying gasoline for your cars, for your work vehicles, that's a constraint on those businesses. That's going to slow business development, just those higher commodity prices. So one of the goals of the U.S. Federal Reserve in the U.S., of course, is to restrict growth so there's less inflation. Well, inflation itself may be restricting growth, and therefore you're seeing some of the central banks maybe questioning whether they want to raise interest rates a lot in the near term. All right, on to commodities, and there you can see gold having another good week. It broke its downward trend line 4 weeks ago, and we had sort of a cautious buy in that situation. It probably will get up to this level in the next week or two, and when it does, I expect it to stall. But gold is good. It's just not that exciting yet. There's not a lot of action, but I think it's one of the better places to be. Now here's the oil chart, and you can see that my prediction that oil would get stuck last week because it was at the top of the channel. Well, that failed. We actually have gone parabolic. We've broken out through that price. Now it becomes an emotional market. It is no longer rational. People are chasing oil prices higher, and that's great if you're a trader. You can make lots of money from that. Just realize it's very risky, and you can get a sharp pullback all of a sudden, particularly in an oil market that's driven by headlines. And so if there is some sort of positive reaction between Ukraine and Russia, something positive for oil prices, you can see oil move down very quickly. And so be careful holding these things for the long term. No reason to sell them. Just watch for the exit door very closely. And finally, the fear chart. We've been creeping up in fear. Still not super panicked, but something to keep an eye on as that VXX chart moves higher. So my ratings then, neutral long-term on both US and Canadian stocks, but different in the short term. I'm bearish short-term on US, neutral short-term on the Canadian market. Still neutral long-term on gold, but bullish in the short term as I have been for a few weeks. And oil remains bullish in both time frames. The commodity sectors continue to attract the buyers while most of the market languishes in complacency. We need to play those strong sectors, trading short-term or focusing on those alpha stocks, or you could just sit in cash. Nothing wrong with that, playing defense. Oil is emotionally strong but risky, and gold is relatively solid but risky also. All right, well, now let's get into a day trade from last week that we covered in Active Live, and this is INDO, which has been really the hottest stock of the last few weeks. It's given us many great trades, and this one was a trade that happened in the afternoon on Friday and benefited from that rally in oil. You can see the pattern here. So this is a predictive pattern called an ascending triangle, or you could even call it a rectangle consolidation. What's important though is that there's this action candle breakout which provided our buy signal on the 2-minute chart. And so for every $100 of risk on this trade, the purchase was for 50 shares, which is $1,642. This is a very volatile stock. So you didn't have to put out a lot of capital to take $100 of risk. Now the stock went parabolic, and then it broke its parabolic trend right there, which is a good sell signal. And that meant a $550 profit, not loss. I got to fix that from last week. A $550 gain for every $550 of capital required to take that trade. And so that's a 100% return on a very volatile stock, benefiting from a strong energy market that has continued to perform well in the last little while. All right, let's move on to a Stockscores market scan. We're going to jump over to my website, stockscores.com, and we're going to run the abnormal break scan on the Canadian market. And I'm running it on Canada because, of course, we've got lots of commodity stocks in Canada. Let's see if any of these are breaking from good patterns. Now, here's a mining company that really has lagged, and it's starting to come alive, but it lacks volume. It's got a lot of resistance here. So when I analyze that chart, I think it's better than it was, but it's still not great, and so I would pass on it. Now here's a stock that started behaving abnormally on Thursday. That's of course what we always look for, as it broke up from a rising bottom through resistance. Friday it moved up another 39%. So again, that short-term trader can enter that trade on Thursday and be looking really good as we come into next week. It's too late now, however, because the chart has run away. All right, so let's go through these a little quicker and try to find either examples of good trades from the past or stocks to consider now. There is a break from a predictive pattern. Breakout right there, strong volume coming in. That was at $1.25. Stock hit over $2 on Friday. Too late now, but if you're in that, it's a solid hold. This stock showing a little bit of abnormal life on Friday, but I would give it maybe a 6 out of 10. It's going to find some resistance in this zone. I think it has a 60% chance of going higher. Let's go through these a little quicker. This is a decent pattern. This is called a pennant pattern. So if I draw a line across the tops and a line across the bottoms, you can see the pennant. You go upward, you compress in volatility. You can see some volume coming in, some price action is solid. Liquidity is quite low. It only traded 253 times on Friday, and so that's not as much as I'd like to see. Let's take a look at the 3-year weekly chart just to get some context. And this stock has good long-term upward momentum. You can see it broke from a pennant back there as well, and it's now doing a little one here. I'd say it's good, 6 out of 10. I just wish it was a little more liquid and the volume was a little more abnormal. So we'll give that a 6 out of 10. All right, I'm going to go through these a little quicker because we have 22 stocks to go through. The beauty of the market scan tool is we can go through these pretty quickly. When we see something worth considering, we can change the time frame. So I've switched this to a weekly chart. Decent looking long-term weekly chart on MDI, a oil service company, and many oil service stocks been doing well lately. The issue though is when we look at that time frame here, we're right at resistance. This is on the daily 1 year chart. And so I think it's going to pull back in the short term and maybe go sideways. And I like it if it can give us some sort of second signal, but right now I would expect that it will stall there given that longer term resistance. TELUS, really nice breakout back here. This is the kind of patterns we want to look for. So there's the breakout from an ascending triangle. It's gone up ever since. I haven't seen any of those this week, but we'll keep looking here. BCE, another one that broke out recently, but from a little bit more volatility than I like to see. But it is notable that those communication stocks, those cellular companies, are doing well. All right, so there's a few 6 out of 10s this week. I don't think anything is stellar, so we'll leave it at that. Hope you've enjoyed it. If so, please subscribe to the channel. It's always nice to see more and more subscribers coming in. It's free after all. And I hope that you have enjoyed this, learned something from it. If so, click on the like button, and we'll see you next week. Trade well.